Let's look ahead, Kumar Saab, and look at how you are trying to chart newer areas in terms of fresh demand. And of course, how do you intend to maintain this 36% growth that we are seeing both in the top line and the bottom line? What are the areas that you look forward to in terms of newer and higher demand for loans, and how are you planning to address them?
First, we have a very robust appraisal system and also very robust review and monitoring system in place. So our focus is not only to do the appraisal, also to make the developer aware about their challenges, what they are going to face. It is not that we will lend and forget. No. While lending, we will caution them. These are the challenges we are going to face. At times, some of our developers feel uncomfortable, but at the end, they realize that what kind of support we have given. So, as on that, they consider us that our turnaround time is quickest among project financing space. So, despite having 76% of loan book in the private sector, since in renewable, 80% of the project come from private space and 20% roughly comes from government space. It is just inverse relationship in thermal project. So here in renewable, the small ticket projects are coming in new and emerging, particularly CPG, ethanol, e-mobility, in storage, small ticket size projects. Larger ticket projects are by and large coming in wind, solar, and hydro. See, earlier larger hydro we are not doing. Post 2019, change of definition of RE, the larger project, hydro project are also coming under RE. So now we have started lending larger hydro also. So therefore, in the time to come, in this new and emerging space, particularly if you look at green hydrogen, big players are going to come there. At least those who have already well established in solar and wind or hydro, they can get into this field because they require the input material as RE to make the hydrogen green. So therefore, big tickets in that space we are going to get new and emerging space. Still, there is a issue with respect to viability of that. Government is considering various options for supporting through viability gap funding. So we envisage fair amount of growth, both big ticket as well as small ticket, new and emerging space. Granularly, that is going to continue the same way what it is going on so far.
Mr. Kumar, you will always need money to lend, and seeing the loan growth in a very high 30 to 40% range, what are the plans for raising funds, and what is the rate of borrowing that you are incurring as far as getting these loans on your book is concerned?
See, we had a meager net worth of 2,300 in March 20, and from there we have come to 9,800 in just 4 years. Net worth in 33 years and 4 years we have added more than 6,500. So that happened because of Government of India sanction of 1,500 crore equity, then our IPO of 2,100 around infusion, and then we have QIP in pipeline, and this quarter we will be hitting the market. We have the plan, subject to market conditions and all. We'll be requiring, we have already indicated for 1,000 crore, but final figure will take a call as we proceed towards the timing of the QIP. And but that mode we have already declared that it will be mode of raising will be QIP. And debt market also, domestic debt market, we are so far last 4 years, we have focused more on domestic debt market because at March 20 our resource composition 57% was overseas. Now it has come down to almost 14-15%. And now we'll be looking into certain overseas greenhouses who are keen to invest in pure green companies. And very soon we'll be moving to them and meeting them also in this quarter itself. So we envisage that whatever, already if you see, our borrowing cost has gone down 14 basis points. Our net interest income has gone up 9%. And this our net NIM has gone up 13%. So in the time to come, we envisage another at least 10-15 basis point cost reduction vis-a-vis what we have done so far, because we got our international rating done 6 months back, and also AAA stable just a year back, 9 months back. So therefore, the timing as well as requirement of fund, everything is perfect with us. See, one most important aspect any investor, be it debt or be it equity, in a project finance company where there are challenges and private sector is doing, they want qualitative corporate governance standards. In the country, we have the benchmark today. I am very happy to share with you, we are the only company who could do full audited accounts and submit to the public in 9 days. No, so far, no other corporate in India has done. Whoever has done, they have done limited review. When we do full audit, means our records, information, documents, figures are much more sanitized, and we are well prepared for our annual audit also. So this kind of qualitative governance, it's much more boosting factor for the investor to come. So we hope and believe in the time to come we'll further reduce slightly the borrowing cost. And we have in the past exhibited whenever we save in borrowing, substantial portion we lend pass on to the projects so that maximum project can develop and our scale can go up. Again, say 8,500 crores of disbursement annually. Last year we did around 25,000, and this year, though we have told to our ministry around 29,000-30,000, we believe that it can further go beyond that. So whatever happens, if you see continuously, consistently, if you can sustain our performance in numbers and governance quality, that will be a perfect matching when we are working in a sustainable sector, sustaining the environment. There we can sustain the performance and sustain the qualitative governance. That is important, I think.
If you like the video, do like, comment, share and subscribe.